This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending August 1st, 2020. Our question this week is, what is the Southside portfolio? The answer will be provided later in the video. The market does one of three things every day. It goes up, it goes down, or it stays relatively the same. There are many possible reasons why the market goes up, down, or sideways. Economic outlook, the price of oil, trade tariffs, interest rates, or even negative and or positive sentiment. That is the belief that things are not going to go well or that they are going to go well. This week, the market was mixed. The Dow Jones Industrial Average decreased 0.16% for the week, but it was up 0.44% on Friday. The S&P 500 increased 1.73% for the week and up 0.77% on Friday. And the Nasdaq increased 3.69% for the week and up 1.49% on Friday. On Thursday, the market was mixed. The Dow Jones Industrial Average and the S&P 500 dropped as a result of new unemployment claims topping 1.4 million, which was the 19th week in a row that new claims exceeded 1 million. And the GDP, the gross domestic product, plunged an annualized 32.9% for the second quarter. New unemployment claims, congressional hearings, new laws and regulations, and economic reports are news. News drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down, but with an upward drift. The market will continue to go up because the powers that be want the market to go up. And one of those powers is politicians, Congress, even your local, state, and city officials. They will use their influence to make the market go up. This past Wednesday, Congress held a hearing on big technology corporations and their alleged antitrust activities. Congress, quote, grilled, unquote, the chief executive officers of Amazon, Apple, Google, and Facebook, accusing them of unfair business practices and monopolistic behavior. These hearings were just political theater, which is what American politicians always do. Theater designed to lead you into thinking that Congress is going to do something about big corporations crushing small competitors. Congress is going to do nothing, and the market knows that Congress is going to do nothing. Look at the stock prices of Amazon, Apple, Google, and Facebook on Wednesday, July 29th. Amazon went up 1.11% to $3,033.53 per share. Apple went up 1.92% to $380.16 per share. Google went up 1.45% to $1,522.02 per share. Facebook went up 1.38% to $233.29 per share. As you can see, the news that Congress was grilling the tech giants meant nothing. Look at their value and look at the wealth of the founders of Amazon, Facebook, and Google. The fact that these four stocks went up on Wednesday and will continue to go up has almost no meaning to your average worker, especially delivery drivers, Uber drivers, and other service economy workers. Most Uber and Lyft drivers and other service workers do not own stocks. Are you an Uber driver? Do you deliver food? Do you work for UPS? Do you own Amazon, Apple, Google, and or Facebook stock? Do you own any stocks? If not, why not? Is it because the stock market goes down from time to time? The market will go down from time to time, but it has always come back. Look at what happened in March of this year and look where the market is now. It is up for the year and it has almost reached its March high. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I simply try to take advantage of the market as it is. I take what the market gives me. Whether it's going up or down, how do I do that? I apply the Southside trading strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list for the week ending August 1st, 2020. I trade at least 3 stocks on the list every week. The strongest performer on the list this week was CRWD. It's in the third column. It increased by 13.17% for the week. I happen to have had trades on it that generated cash flow and increased in value. However, right now, I do not own the stock. Whether a stock goes up or down, you can generate cash flow on it. Whether you own a stock or not, you can still generate cash flow on it using the Southside strategy. The Southside strategy involves trading for weekly cash flow. That is, trading for income. SPY, that's SPY, is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? As of August 1st, 2020, my portfolio is outperforming the S&P 500 index ETF SPY. Year to date, my portfolio is up 16.52% versus 7.29% for SPY, a difference of 9.23%. I am beating SPY by 9.23%. This week, equities, including puts, calls, and ETFs, make up 53.34% of the portfolio. Cash is 46.66%. Which brings us to our question of the week. What is the Southside portfolio? The Southside portfolio is a portfolio or group of financial instruments such as stocks, ETFs, and stock options and cash used primarily to generate income or cash flow, and secondarily to increase in value. The composition of the portfolio changes every week, but strives to maintain at least 25% in cash and generate a cash flow of at least 1% of the portfolio value every week. The cash flow generated for this week was 2.93% of the portfolio account value. The account value increased by 5.04%. Meanwhile, the S&P 500 ETF SPY increased by 1.76% this week. I sold 8 options contracts this week, 5 calls and 3 puts that range from $176.68 to $1,122.99. You can get more details, including the total dollar amount of cash flow for the week, on the website Southside School of Financial Freedom.com. The Southside strategy was developed over time only after gaining foundational knowledge and through experience and study. The Southside School of Financial Freedom promotes using the U.S. financial system to gain your financial freedom. In order to do that, you must RSI, Read, Save, Invest. RSI, Read, Save, Invest. I share my strategy for free because I want to motivate ADOS men to start thinking about the U.S. stock market and learn as much as they can about building wealth and generating income from the U.S. financial system. There are as many trading strategies as there are traders because even when people use the same strategy, their results will differ. They differ because of timing, application, and risk tolerance. The Southside trading strategy is a cash flow strategy. The objective is to generate income every week. It does not appreciate every week. That is, the value does not always go up, but it always produces cash flow or income. Think of it this way. Do you buy a house to flip it, or do you buy a house to rent it out? The Southside strategy is akin to buying a house to rent it out, to generate income. What is the objective of your strategy? Please use the Southsides as an example of what to do or of what not to do. Ultimately, if the Southside strategy proves not to beat the S&P 500 index, then you will know what not to do. The Southside School of Financial Freedom is open to your questions and critique. Please comment below. If you want to learn how to use the U.S. stock market to become financially free, then visit the Southside School of Financial Freedom.com, where you can learn how to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales, How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia. Available on Lulu.com and Amazon.com. Please like, share, subscribe, particularly ADOS. Thank you.